Hello members, this is Fernando and I'm Robert.
Hello.
We wanted to make a video talking a little bit about the settings and modes, since a lot of people have questions about this and it's something that, in my opinion, is quite interesting. I'm going to let Fernando talk a little bit about mode 1 and mode 2 and the differences.
Completely. So basically we have two trading approaches to the markets. One is gonna pretty much designed, or it's pretty much designed for handling big market moves, and that is mode 1. So basically mode 1 is pretty much designed to hold floating drawdown and avoid a balance hit on the account. And it's going to use recovery techniques. The first trade, it's only allowed to go between the 22-hour and the 0-hour on server time. And the recovery trades can happen at any time, and it can go up to 6 trades on mode 1. So you can have one initial trade and 5 additional recovery trades to handle or treat all the entire account, or all the entire trade basket as one big position, essentially.
Okay, how often could someone expect having that many trades open, 4 or 5s?
Well, it's pretty uncommon, to be honest. In all honesty, it's very frequent to have the trades out pretty much within 1 or 2 trades in. So it's pretty rare to happen.
Okay. In the last 15 years, how many times has mode 1 had issues?
Well, in the last 15 years of really high quality data, actually we're talking about 99.9 tick data quality, it only had a stop between 0 and 2 times. And I talk about between 0 and 2 times because it's pretty much dependent on the spread. Because back then on 2006 there wasn't that much liquidity on the market, especially in a pair like GBP CAD. So the spreads were pretty wide. And back then having a spread of 15 pips or 30 pips, it's relatively common. So it's pretty much on spread dependent, where you can either have or don't have those stops. So I would say between pretty much 0 and 2 stop losses over the last 15 years of data.
And how much is a stop loss?
Well, you can tune it up on settings. You can either choose it to be pretty much anywhere between 5% and 50% of your account. And pretty much all it does is adjust the trading size or the trade volume of each position accordingly to the settings you like. And actually the big thing is that with Unlocked version you can even customize that. You can choose not only the risk but also the cutoff point. So you can pretty much customize it to whatever you want.
I see. And so in summary, mode 1, let's say you use the default, which is 20%. That would mean that you risk at most 20% of the account, but the likelihood of actually taking a 20% hit is quite low.
Yeah, exactly. It's actually really low, and it's gonna most likely get out quite quicker to the on the market. So
okay, and it sounds like it's pretty versatile, meaning that you can use it with different brokers. FIFO is fine.
Yeah, FIFO is fine.
Brokers with big spreads.
Brokers with big spreads, that's fine. You can use those market makers, pesky brokers. So
no
troubles in handling.
That's what I was getting at. Market makers. Okay. Got it. Now, mode 2, how is that different?
Well, mode 2 is pretty much like a high-performing machine. And that means that it's gonna trade more often. It's gonna probably have more profits than mode 2, and actually, that mode 1, I'm sorry. And actually mode 2, it's expected to have as much as twice the returns as mode 1. And that comes from having more trading frequency. You can expect pretty much a trade a day, or one trade group a day with mode 2. And the only difference is that on mode 1, as it's designed to avoid balance losses, you will see the equity curve going like a pretty smooth bottom A to top, bottom left to top right. And with mode 2, it's going to be a choppier, right? So you're going to have balance losses here and there. And overall, you're going to see like a overall direction of your account going up. That's the main difference, because when it has to take losses, it pretty much takes the losses quite quickly. And it's not that keen on holding floating drawdown. It's pretty much, okay, I've got to take a loss on balance, I'm going to take that loss. So.
Okay. So with mode 2, the trading frequency is higher. The profits you said are about twice as much as mode 1.
Yeah. Completely.
So if I set a risk of, let's say, 25%, I could expect a return more or less of 50% per year?
If you have a settings or risk settings of 25%, you can expect 25% return in a year with mode 1. With mode 2, if you set up at 25, you can expect a 50%, pretty much double the risk.
I see. But with mode 2, one very important caveat is you need to have a broker with good spreads.
Completely.
The better the spreads, the higher performance mode 2 is going to perform at.
Yeah, and actually that makes sense because you're looking at shorter term positions, and that means that you're aiming for a shorter target, so you want to get out faster at the market. And that means that pretty much the distance that the market has to move to get out, it's smaller. So obviously a larger spread will have a bigger impact under that trading like logic, basically.
That makes sense. And if, let's say, I choose a 25% risk, since it takes these small stop losses, I would assume that the way that works is in the last 15 years of data, if I set 25, 30% risk, let's say 30% risk, that means that from equity high to equity low, the most drawdown was 30% in the last 15 years, correct?
Exactly, yes.
And that, I would assume, would mean having multiple stop losses.
Yeah, you can
In
have
kind of
back-to-back stop
consecutive.
losses. Yeah,
Oh, okay.
and it has to do with volatile market conditions. So if you're going through Brexit or something we're going with oil, which affects the Canadian dollar, it's likely that those situations might affect the Mode 2. But the good thing is that you can run both of them in tandem. And actually, if you're a FIFO affected user or client, you can do a workaround because you can't have both of them working at the same time because it might lead to hedging. But you can set up one account for Mode 1 and a separate account for Mode 2. So you pretty much have both of them running at the same time, but not on the same account. So you avoid FIFO issues.
Perfect. Okay, that makes sense. So in summary, Mode 1 is kind of the more or less, I don't want to say bulletproof, but for lack of a better term,
Yeah.
the most robust option when it comes to dealing with any kind of broker.
Completely.
Mode 2 is a performance machine, and it works excellent with ECN brokers with spreads of, I'd say, 4 pips or less, more or
Yeah.
less. And it can return much higher yields than Mode 1, usually double, but it depends on how tight your spreads are. I think that's pretty much it, unless if you want to add anything.
Well, pretty much I just want to add that we're very keen on communicating with you guys. So if you have any questions, if you want to address a specific topic regarding Mode 1, regarding Mode 2, or pretty much just pick our brains, about trading, which is kind of a fun thing to do, you can just reach out to us in the Telegram groups. You can send us a mail to support@luckydragon.ai, and we're gonna be more than happy to help you out.
And if you guys have any questions, let us know. We're here to help.
Completely. Have a great one, guys, and thank you for watching this video.